The small business, manufacturing, trading, and services were asking me, you have bought a video for salaried people. Why not for us? We are also paying tax all the way. We need tax saving all the way. Here is a small video and PPT for them, which gives them a leverage to save taxes. We are asking you questions now. Worried on your taxes as a small entrepreneur? Your turnover is less than 3 crores and you are a manufacturer or a trader. Your turnover is less than 75 lakhs. Are you a service provider and are you in the business in the field of hiring less than 10 vehicles? These are the four key points that this takeaway gives you. We can assure you a smile on your face. Still stay till the end and hear us properly. Any more doubts? You are always welcome to contact us on 98450 68263. Going to the further, this is a section 44 AD, a gateway to concessional tax schemes. But to you, highlights of these sections. Taxable limit for this section is 3 crores. That means in 23-24 financial year and 24-25 financial year, that is this year and the next year, the targeted is 3 crores. Why they have kept it 3 crores? That is in mind. It started at 75 lakhs, it has gone up to 3 crores. It itself is a great journey by the government of India to recognize the small entrepreneurs. A new condition has been introduced. Minimum of 5 years to be continuous for presumptive tax. That means if you go to the presumptive tax, you should continue in the presumptive tax for 5 years when the turnover is less than 3 crores. You cannot opt 1 year presumptive, another year regular tax. This is a very important thing. You cannot switch over to the regular business. And in case if you switch over to the regular method, the tax difference has to be paid and normal filing has to be done. What is the benefit of 44 AD for having a turnover less than 3 crores? For example, 3 crores at a 15% of profit comes to 45 lakhs even if you have 85% bills. In a 3 crores, if you have only 50% bills, then your profit is 1.5 crores. But under this section, government gives a leverage without any books of accounts. You need to declare only 8% of the profit on cash receipts and 6% on the digital receipts. And no need to maintain accounting records, no need to pay advance tax, no need of audit of the books of accounts. Are you not happy? 8% of the 3 crores, the profit is 24 lakhs. On the 24 lakhs, you pay tax on your individual slab. Correct? Individual slab taxes are paid and then you can file your returns. Correct? So that there is no need for you to worry on your advance taxes and books of accounts too. Instead of paying the taxes on a higher rate, no need of worry of any books or anything. ITR 4 can be filed instead of ITR 3. If gross revenue above the prescribed limit, then it is taxable under section 44 AD. If the individual, the problem here is the individual partnership firm as multiple businesses, gross receipt should be clamped. For example, this is allowed for individuals and partnership firm only, not for a private limited company or a LLP. And if you have multiple businesses, for the purpose of turnover, as a proprietor, all the units will be clubbed together and it should not exceed 3 crores, which you should keep it in mind. It is applicable for individuals, partnerships, HUF and proprietorship. And of course, business of transportation, that is hiring, licensing of goods and garages cannot adopt this provision as referred in section 40, and it is referred in section 44 AE wait for the transporters, they need to wait for some more time. How is computation of section 44 AD done? I already shared in the previous pages. Again, I am sharing you here. Say for example, gross receipts of rupees 70 lakhs, comprising of digital receipts of 60 lakhs and cash receipts of 10 lakhs. Proprietorship income will become 4 lakh 40,000 and tax will be just 0. For a turnover of 60 lakhs also, your tax is made to 0. Which are the ineligible businesses? Tribes reduction under section 10A, section 10AA, 10B, section 10BA for pertinent financial year. That means that assessees who claim exemption under these sections are not allowed to use the section 44 AD benefits. Eligible for 80HH and 90 RRB benefit availers and agency business is not under this. Commission and brokerage business, if you are doing a commission business of real estate or a brokerage business, you are not supposed to use the section 44 AD. Professionals are not supposed to use the section 44 AD. Then what is for professionals? Wait for the next page. Insurance agents cannot use this computation under 44 AD. Depreciation are not available under this section. It is a strike before depreciation. The total calculation is only on gross revenue. Now, a beautiful section for my dear friends who are the professionals under section 44 ADA. This scheme is given relief to small taxpayers carrying on professional business up to a turnover of rupees 75 lakhs. This is a presumptive tax scheme. Who are the professionals that can be included under this constitutional tax? Legal, medical, engineering, architecture, accountancy, technical, consultancy, interior decorators, other professionals notified by CBDT, Central Bureau of Direct Taxes. The buyers of individual presumptive partnership are not eligible. The buyers of individual presumptive are not eligible. The gross receipt should not exceed 75 lakhs per annum. What is the taxable limit? Here it is not 8 or 6%. It is straight 50% on the gross receipt. However, income can declare less than 5%, declare more than 50%, but not less than 50%. Less than 50% goes to the tax audit limits. Tax audit is not applicable under the presumptive if you offer 50 or more, and depreciation of course not available. Now coming to the computation of the concessional tax. Say there is a gross receipt of 60 lakhs of a professional tax consultant, let us assume, or a professional doctor, let us assume. Taxable income will be 30 lakhs and tax will be after deducting ADC, ADD and other eligible receipts. Tax will be computed accordingly as per the individual slab on the taxable amount. Are you not satisfied? There is no requirement of a books of account, there is no requirement of an audit, just declare 50% without anything and you are relieved. And if you feel my expenses are not 50%, it is 90% or 80%, no need to feel sorry, maintain the books of accounts, get your books audited and file your returns. Now I am coming to a section called 44 AE for my transport friends who are in the business of plying, hiring and leasing of goods carriages, the individuals, proprietorship, HUF, firm, here company is also eligible. That means private limited company also are eligible under this if they are a goods carriage business companies. The condition is that the business should not own more than 10 vehicles. Here is a catch that you should not own more than 10 vehicles at any time during the year. That means it cannot become 15 and at the end of the year automatically it cannot reduce to 9 by sales. At any given point it should be 10 only or less than 10. So you should be very careful on this. This is again a presumptive tax. Business with more than 10 goods vehicle are not eligible for the tax exemption. What is the tax exemption? Let us see the next page. The computation of a conditional tax under this section is made like this. Say for example, a heavy goods vehicle with income of rupees 1000 per ton of gross vehicle weight for every month or a part of month during which the heavy vehicle is owned by the taxpayer. Other than the heavy vehicles goods rate of rupees 7500 per month shall be adopted or part of the month to be considered as full month for the computation. For example, heavy vehicle carrying 13 tons of rupees 1000 per month, number of vehicles 5, monthly income will be rupees 65,000 into 12 months will be 7,80,000 as per section EAE, as per section 44 AE. That means a heavy vehicle with a vehicle of 13 vehicles and a income of 1000 and a vehicle amount of 1000 per month and vehicle having 5 for 12 months, it will be 7,80,000 as per section 44 AE. Let us assume income other than heavy vehicles. 4 vehicles monthly income will be rupees 30,000 for 12 months, 3,60,000 as per section 44 AE. No need to maintain books of accounts. Advance tax will not be applicable. Tax on the income of 7,80,000 or a 3,60,000. The 10 is put extra in the slide which will be changed. Will be applicable on 44 AE. So no need to maintain books of accounts or not get the books of accounts audited. Thank you for your patience learning, my dear business and service entrepreneurs. Stay tuned for your compliances under different acts. Is it very difficult for you to understand? No need to worry. Contact us on the contact number given 98450 or on email ID as@totalsolves.in. We are just a phone call away to help you on any of the tax matters and tax advisory services. Wishing you a happy day.